Hello, welcome to electronic accounting class. And this course will actually take 10 modules for us to go through. And this is the first module where we'll be talking about the fundamentals of electronic accounting. And when we talk about the fundamentals of electronic accounting, we'll be looking at how technology is revolutionizing financial management and enhancing speed, accuracy, and accessibility in today's dynamic business environment. And the content for the module, as we'll be discussing, are the definitions and scope of electronic accounting, the evolution from manual to computerized system, the benefits and limitations of electronic accounting, the types of accounting software, and also the core components of it, where we talk about the hardware, software, database, and users. And when we look at electronic accounting, it actually leverages computer system and specialized software to record, store, process, and report financial transaction. And this shift from manual to digital tools fundamentally redefines how accounting data is managed, offering enhanced speed, accuracy, and efficiency. And when we look at the modern organization, starting from the startup to the multinational corporation, you see that they rely on electronic accounting for everything from basic bookkeeping to complex financial analysis. And this reliance is driven by the advantage that are derived, such as the automation, the real-time reporting system, integration, and compliance with evolving financial regulations. And by definition, we look at electronic accounting, or which is also called the e-accounting, to be the use of computer, the software, and related technologies to automate and streamline financial process. And this actually replaces the traditional manual system with efficient, accurate, and accessible digital workflow. And according to Teru Itoku and Bello, 2019, they define electronic accounting to be a modern development in accounting characterized by high speed, accuracy, and instant results made possible through the use of electronic media. And this integrates hardware, software, database, and users into cohesive system, which facilitates accuracy, timeliness, and regulatory compliance. As per the scope of electronic accounting, the scope is actually broad, and it encompasses the comprehensive use of technology for various accounting functions, and it integrates accounting principle with IT capabilities for enhanced efficiency and accuracy. And when we talk about the scope, the first we'll be talking about is the transaction processing. And this deals with the digital recording of sales, the purchases, the receipts, and payments. And by this, it actually brings about a reduction in error and enabling real-time data access. Another is the financial reporting, which is the scope of electronic accounting, and this deals with the automated generation of balance sheet or the statement of financial position, income statement, and then the cash flow statement for timely decision making and compliance. And we also have the payroll management as a scope, and this deals with the accurate computation of salary, deductions, and tax obligations, streamlining administrative tasks. And the last we'll be talking about is the data security and integration. And this deals with the incorporation of password protection, the encryption, and backup. And it actually connects with the CRM, the ERP, and the e-banking system. Looking at the evolution of electronic accounting, we can see the movement from a manual system to the computerized system. And when we talk about that, accounting has evolved from labor-intensive manual method to a sophisticated computerized system. And the manual era, while its fundamental was prone to error and slow data retrieval, and we actually have the evolution can be divided into four different phases or periods. The first is the manual era, which is characterized by paper ledger, hand-recorded transactions, and it's actually time-consuming and prone to human error. The second phase is or period is the mid 20th century, and this is characterized by mainframe computers, which are automated payroll and basic ledger functions for large organizations. We also move to the 1980s to 1990s era, which is characterized by personal computers, and they are actually user-friendly softwares. And this can example of this the Peachtree, the QuickBooks, and these emerge for small and medium scale enterprise. And we have the current one, which is the 21st century period, which is characterized by cloud computing. An example of this are the Zero QuickBooks Online, and they offer real-time access, collaboration, and automation for organizations using it. And this shift transformed accounting into a strategic business resource, enhancing digital making and decision making rather, and operational efficiency. What are the benefits of electronic accounting? It offers a range of benefits, a range of advantages, and the first is speed and efficiency. When we talk about speed and efficiency, it actually results in rapid processing, real-time access, and reduced administrative workload. Another is the accuracy and error reduction. And this brings about, the electronic accounting brings about an automated calculation, a built-in error detection, and balanced record. Also, another is the real-time reporting, where we talk about the instant reports generation for timely decision making. And also, another benefit is the system integration, whereby it brings about the seamless connectivity with the CRM, the ERP, and the e-commerce platform. We also have an advantage. It also has had an advantage as per the data security, and it talks about the encryption, user-friendly, user access control, and automated backups. And lastly, we have the regulatory compliance as an advantage, where it deals with the configuration to the IFRS and the GAAP, and also it brings about a simplified tax preparation form. It has its own limitation. The electronic accounting also has its own limitation, and it is known for high initial cost. That is, in the place of setting up, there is significant investment in software, hardware, and training. Another is the technical expertise, and it actually requires computer literacy and ongoing staff training. Also, it's known for the system downtime. And by this, we talk about the vulnerability to failure, the internet outages, or the software bug. We also see the limitation in terms of data security risk, and it shows the susceptibility to cyber threats like hacking and malware. And also the software updates. And for this, the regular updates can cause compatibility issues or require new training. And lastly, the over-reliance on automation, and this can actually lead to overlooking the need for data verification and professional judgment. And an effective strategy balances automation advantage with diligence oversight from trained professionals. What are the types of accounting software that we have? We can see it in three forms, and the accounting software varies based on deployment, the features, and then the organizational needs. And the first type of accounting software is the desktop-based accounting software. And this is installed on specific computers or local networks. And example is the Tally ERP9, the QuickBooks desktop, and they offer offline use and local control, but limited accessibility. Another is the cloud-based accounting software platform, where we talk about it operating online and data are stored remotely, e.g., example are the Zero QuickBooks Online, and they are accessible anywhere, automatic updates, but they require internet and the recurring fee. You have to pay for them. And we have the hybrid accounting software platform also as a type, and where we talk about the combination of desktop and cloud elements. Example is the Sage 50 Cloud, which offers local control with online access, but can be more complex and also expensive. So in choosing the right system depends on the budget, the accessibility, the security, and the flexibility need that a particular organization actually wants. And what are the core components of electronic accounting? The electronic accounting system relies on harmonious integration of several interdependent components. And these components are the hardware. And when we talk about the hardware, um, this is the physical devices, or they are the physical devices such as the computers, the servers, the printers, scanners, POS terminals, and the storage devices. We have also the software, which are programs and applications for accounting functions. Just like we've been saying, the QuickBook, the books, the Sage, Zero, SAP, and also for the database being the third component, core component of electronic accounting. It actually stores and manages financial data, ensuring organized storage, fast retrieval, and secure access. And also the last is the user. And when we talk about this, these are the individuals interacting with the system, such as the accountants, the analysts, auditors, and managers. And their seamless interaction ensures efficient financial operation and accurate data for decision making. In conclusion, electronic accounting is transformative advancement in the financial management, and it actually integrates technology and automation for enhanced accuracy, efficiency, and decision making. And we've been able to see that it has evolved from manual bookkeeping to sophisticated cloud-enabled system. Also, we've seen the benefit in terms of speed, integration, scalability, and the regulatory compliance. We've seen its limitations as it involves high initial cost, technical requirements, and security concerns. And also we've seen that effective implementation requires strategic planning and ongoing oversight professionally. And by leveraging on its core components, electronic accounting bridges the traditional principle with the dynamic need of today's digital economy. Thank you.